Because in 2019, the word on everyone's mind was recession, but at the start of the new year, we see a mixed picture. Economists across Wall Street do not see a recession in 2020 or beyond, according to Goldman Sachs. CEOs, however, list recession on the top of their list for biggest concerns as we begin the new year. That's according to a survey from the Conference Board. We want to turn this to the panel. Let me start with you, because American CEOs they rank recession fears third on the list, but globally CEOs seem to think that's the number one concern. Is it a continuation of what's happening in China?
Yeah, and I think that would reflect the fact that people here, CEOs here, are more domestically focused, whereas, to your point, the international ones see China a little bit more clearly maybe than American ones do. As far as, what would cause a recession right now, I mean, it's hard to see anything jumping out and biting you in the leg, right? And it is very different from last year when it seemed incipient, like any moment now. And I think the sentiment really has changed, for better or for worse. I don't know. I mean, you could argue, of course, that the fact that people don't see it coming means it is coming. But, on the other hand, there seems to be clear sailing right now. I mean, I would not be someone who says you're going to see a recession, contraction in It's certainly not in Q1 or Q2, Q3. I mean, do you see it? I mean, how would you see it?
So I'd say, first of all, if you look at that survey, people forget, but last year coming into 19, in the U.S., it was the number one risk that CEOs saw. And the thing we always point out to people is it's a different in a CEO or CFO seat vis-a-vis the economy, because what they're focused on is, are their input costs going up? And last year the case was yes, because labor is getting more expensive, right, as well as other factors for cost of goods sold. And was there a potential inability to relever their balance sheets further, right? So when you look globally now, it's a similar situation, but it's exacerbated by not only the Chinese worries, but also the slowdown in Europe, where you continue to see very disappointing data in Europe, to be euphemistic about it. And on the cost side, again, labor markets have tightened up significantly in Europe. They're obviously very tight in the U.S., so you have to pay more for labor. So we think they're overweighting the probability of recession this year, similar to what they did last year. And then to directly answer your question, it's very hard to see a recession between now and the end of the year. So on the consumption front, we expect consumption to be similar to last year, maybe a little weaker, but that's about 140 basis points of contribution. I don't know if you focus on it much, but the recent spending bill out of D.C. could potentially add up to 75 basis points of growth, which is a huge number. Right. No one's focused on fiscal discipline at all anymore. CapEx, we don't think is going to boom, but should not be as big of a detractor on growth next year. So we think 2 to 2.5% growth. And unless you have the labor market start to deteriorate dramatically soon, very hard to see recession at the end of 2020.
So it sounds like you don't think, even if some of these CEOs and CFOs are cautious, that they're not going to sort of talk themselves into a recession, that it won't really curtail their spending plans, for example.
So CEO and CFO pessimism usually translates itself into lower CapEx than business fixed investment numbers. And that's exactly what we saw last year. So again, we don't see that coming back. Like the late 17, early 18 surge that was driven by tax reform and deregulation, that's totally off the table, because let's face it, the phase one deal, okay, things aren't going to get worse, but are we really going to get a comprehensive deal with China? Is Europe growth going to pick up? Is the energy patch going to come back in the U.S.? No. But instead of detracting from growth, you could at least see it not contributing negatively or positively, which is a marginal improvement.
I mean, the only scary thing is that usually, you see little black swans or little black ducklings out. I don't see any, that's what scares me. It's like, I don't see anything.
Yeah. Well, that would be the
election.
Black swan.
The election.
True black swan, you don't see.
Right.
Any
exactly. About to happen.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.